In this video, we'll be talking about what are financial markets. Now, people often hear about financial markets in the newspapers, but not many are sure as to what exactly are financial markets. So, I'll make it simple for you in this video. Well, suppose that you have extra money, you have made some savings, and now you have extra money on you, and you want to earn some profit by giving it to somebody, by lending it to somebody. Now, of course, it might be difficult for you to find those people who are in need of that money for any reason easily. So, what you will do, you will go to a financial market, and that could be stock market, for example, where you want to buy shares. And let's suppose another aspect of this financial market is that there are people who need money. For example, they need to start a business and they need money. Now, it's not easy for people to find money, and what they will do, they might go to a bank which has excess funds and they borrow it, or they might go to the stock market and sell the shares to shareholders and raise some money. So that is all what financial market is about. It's a combination of people who have extra money on them, that is, who have savings, and they want to lend it to somebody or invest it so that they can earn a profit. And it is composed of those people who need some money. For example, they are running a business and they need some money. So they go to the financial markets to find somebody who is willing to lend them or invest in their business so that they raise that extra money. Financial market is all about a combination of lenders and sellers. So that's it, what financial market is about. Now, financial market, stock market is a typical example of financial market, because businesses who need funds to manage their businesses, they list their businesses on stock exchange, and shareholders who have money with them, they buy those shares. That is, they give the money to the business so that the business can finance its operations. So stock market is a typical example of financial market. Now, financial markets are divided into two parts: money markets and capital markets. Money markets consist of short-term, marketable, liquid, and low-risk debt securities. For example, US Treasury bills of 3 months maturity. Now, those are very short-term, only 3 months, or you can redeem them even before them in the secondary markets. They are easily marketable, that is, you can easily sell them. They are liquid. Of course, many people are willing to buy them because they are low risk, that is, they are backed by the US government. So the chances of bankruptcy are almost nil. Secondly, money market instruments sometimes are also called cash equivalents. Now, why are they called cash equivalents? Because they are readily convertible into cash. You can just go sell those US Treasury securities and get cash in return. The second category of financial markets is capital markets. Now, the primary difference is that capital markets include long-term securities. Now, if somebody wants to buy money, borrow money in the for a long run, then they will go to the capital markets, and stock market is a typical example of capital market, because over there investors buy shares and they can buy it for long term, because equity shares are not redeemable. So they are riskier, of course, because longer the time span of an investment, the more riskier it is. Now, capital markets have three segments: long term debt markets. For example, if you buy bonds and they have a maturity of 20 years, then that is long term in nature. Bonds are long term in nature, and of course they are riskier, because longer the maturity, longer the risk, higher the risk. Second are equity markets, for example stock markets, and third are derivative markets. Now, derivative markets are a bit complex to explain in this video, but just try to understand that derivative markets, and derivative is anything which derives its value from something else. For example, if there is a field of corn, and what you do is that there is a security or an instrument which states that whoever holds this security, he owns that field of corn. Now, that security is tradable. If anybody purchases that security, then he is essentially the owner of that field of corn. So that particular instrument is deriving its value from a field of corn. So that is what financial markets is all about. They consist of two halves: money markets and capital markets. I hope this video has made your concepts a bit clear. If you do like the video, do give a thumbs up and subscribe to the channel. Thank you.